just put up our last headline, which is from Bloomberg, talking about America, but the 12.3 trillion in stimulus killed the debt default cycle. Almost all fear of bankruptcy has been obliterated from bond markets, even though the global economy is still struggling. It's fair to say that 12.3 trillion stimulus seems to have killed off the debt default cycle. And it goes on to say, the simplest way to see this is quite basic. The lowest rated companies are enjoying the cheapest borrowing costs in history, yada, yada, yada. So investors have raced one another to lend billions of dollars to cruise companies and airlines, even as they bleed cash. So I just wonder. I know, we talk. When we talk to our friends in insolvency and restructuring, the banks certainly don't seem to be in a hurry to move stuff on. So, Luke, are you seeing any changes in bank behaviour lately?
Look, it's the $1 million question, this one. How far is it going to go from a recovery perspective, and what sort of numbers we're going to see? But look, last year, with all the moratoriums, there wasn't much enforcement from any of the banks. Those metrics have now stopped, and there are evictions happening. But what we're seeing is a backlog with the Sheriff's Department now, which is increasing the volume. I think as time goes on, more and more enforcement occurs. I think we're going to see more and more stock coming onto the property market. How many, I don't know, but I believe all the credit that was obviously washed into the system last year, it's definitely stopped a lot of these borrowers from having to enter into an MIP scenario. And I feel that as time goes on, we will see more and more delinquency rates across the major banks. We look at GFC time. It took a year, 2 years till we saw the full impact from a property perspective, and I feel it'll be the same with the current scenario.
And Matthew, you already mentioned before that, for example, when we were talking about this Blackstone property deal, there was just bags and bags of cash all over the place. So even if the first buyer hadn't have been there would have been someone else there with a few shekels less. But are you sort of, are any of the banks talking to you about distress, or from where we sit it, that they just seem to be sitting on their hands, and returns are so low it doesn't really matter. There's no sense of urgency. Are you seeing what are you seeing in the bankers that you speak with?
Yeah, I look from our restructuring business. If you look at where our appointments are coming from, there's only been one that's come from one of the major banks. It's one, something over $20 million. On the back of banking raw commissions, but also, there has been a lot of good learnings from the GFC, and the credit policies are much tighter from the major banks. What we've seen from our appointments point of view, it's coming from second and third tier lenders. So Your investment banks, your offshore groups, your groups that may not have done as much diligence on some of these funding structures and where they sat in the funding stack. There is a number of groups that have been second mortgagees and third mortgagees that are trying to take mezzanine, mezz positions to get a better return on their debt. We are seeing some appointments coming from those groups, most definitely. But I've been saying for quite some time, I don't think the real stress is going to come to our marketplace, similar to what Luke just alluded to before, until Q3, Q4 at the earliest of this year. Once we're really able to identify, if it's a commercial asset, what your true net operating income is, because whilst groups have been, your lessees have been supported by JobKeeper, JobSeeker, that's been able to contribute to paying the rents. And there's almost a forensic audit taking place at the moment on your lessees to make sure they have the ability to pay the rents.
Yeah, well, that's interesting. I mean, I guess as long as interest rates remain where they are, then that's going to be fine. If interest rates increase, then it's going to, it's going to change things.